Peter Kaufman joining us from Gordian Group. Peter, first of all, why don't you just give us, just to introduce yourself, because you're a new guest for us, what specifically do you deal with in a market like this? Where's your business right now?
Well, we're the leading investment bank in the country, specializing in advising companies and boards of directors of financially challenged situations. Distressed would be another word for it.
So business has been slow.
Yeah, right.
Not really.
Well, business has been brisk.
So, but we keep on hearing that there is no more investment banks left. So, as far as an investment bank, are you the traditional model? Are you is this a move to something different? Talk to us a little bit about that.
No, we've been in business for 20 years doing this kind of work. So
compare what's going on now to, let's say, a decade ago. Or, we've been through other recessions in that 20-year period.
Yeah, this feels much different. In prior recessions, you still had money for third-party financings for troubled companies called debtor-in-possession financings for a company that's going to go Chapter 11. And you had buyers of assets, and you had much more liquidity to try and solve the problems of these financially troubled companies. Now, there's a bit of a paralysis in the financial sector, even in the distressed area.
All right, so what does paralysis mean? So let's take a Circuit City, for example, filed for Chapter 11 and said, well, we hope we can reorganize and come out of this, and weren't able to do so. You're saying we're going to see a lot more of that. Chapter 11s that turn into Chapter 7s and companies going belly up, essentially.
Well, there's a lot of that going on in retail, for sure.
Yeah.
Look at all the retailers that file for Chapter 11, next stop Chapter 7. You've got Mervyn's, Linens and Things.
Linens and Things, yep.
Circuit City. Retail, high-end retail is a very, very tough sector. But just more broadly, it is challenging, not impossible, but challenging to find financing for these troubled companies.
What would happen to a GM, for example, if they filed for Chapter 11? No chance of getting any private financing for that. The government would have to back it up. True? Or the government would have to give them the financing?
Well, it looks that way now. I've been a big proponent of using public clout to get private financing in, and I've been pretty vocal about that with respect to General Motors. It hasn't happened.
What do you mean public clout? So explain what you mean there.
Well, the overall principles at Gordian Group that guide successful restructurings are transparency, accountability. No new money goes into a situation without all of the problems being solved. When you put new money into a situation and hope that the problem gets solved, you're always disappointed. And you can see what's happened with General Motors, AIG, etc. What I believe should have been done, and in a General Motors or any of these situations, is for the government to tell the constituents, Uncle Sam is not your banker. We're going to get a group of well-heeled private investors to come in and say, cut your best deal with these folks. The government will stand by to help at the margin, but you need to do this, and everyone needs to give concessions. The bondholders, so the unions, management, a business plan has to be to the private sector's suiting, and that's what I think the government ought to be doing across the board, using its clout to force private sector solutions as opposed to just playing Bonko Uncle Sam and spewing out billions and trillions.
Now, a disclaimer here, because this is not meant to be flippant at all, but is there a point you say about going in as a distressed, as someone that's looking at a distressed company or part of government, you go in and try to fix every part? I asked the question to our viewers, and they're weighing in on it right now. Is there anything right now that you see in the market that is beyond the point of help, where you're even limited as far as what kind of help you can offer to a company that you say, listen, we're washing our hands of that, we have to avoid it at all costs?
I'm sure there are, but there's nothing I could really identify.
So when it comes to the financial situation, the auto sector, that's a vote of confidence to say these things can be fixed. They're not broken.
Well, I believe that there's something that can emerge from General Motors, for example, but it has to be much different. It's got to be skinny down, leaner, a business plan that people can tie to, a capital structure that's supportable, and probably the starting point is, how many cars are you going to assume you can sell over the next couple of years?
Well, and we know Americans don't like to diet.
Yeah, well,
companies or otherwise. We're talking about emerging something much leaner and meaner, but it just doesn't seem to be a whole lot of movement. So you understand why there's a lack of confidence and optimism in this market, right?
Movement in terms of?
Movement in the right direction. As far as seeing any type of, it's been several months now. It seems like we're still asking for money when it comes to General Motors. We're still waiting for a banking plan. There's a certain point when even the most patient individual gets a little bit disillusioned with what's going on.
And I can understand that, but again, the principles of America is in a workout mode, and in workouts, successful workouts, you just don't throw money at them and hope that they get solved. you've got to go and say, here's the new money, but it's only if the capital structure is fixed, the operations are right-sized,
right.
The labor costs are right-sized, you've got a management team that the new money can support. And I believe that you can have all of that with General Motors, but the way we've been going about it, without a credible threat of bankruptcy from the government, which heretofore we have not had, and just giving them billions of dollars and saying, please go solve your problems.
You think we have that threat now, though, don't you? I mean, you get the sense that that's on the table now. I mean, the administration is considering that as a possibility. I don't know if they're going to call it bankruptcy or that it matters, but they are considering some sort of a government-structured restructuring, which they would provide this debtor and protection financing that you talked about, and they would have those agreements in place beforehand. I mean, isn't that, what percentage would you give that scenario right now as a possibility?
I think that's the only scenario that's got a chance of success.
So, but what about the possibility of them actually doing it? Do you get the sense that they're going down that road, or you still think they're trying to avoid it at all costs?
I'm sure they're trying to avoid it. It's politically unpalatable for the government to be the one wielding a hammer to go into Chapter 11. But I don't believe you're ever going to have a successful resolution of all these issues.
They're willing to have, but they're also the ones bailing them out, right, at the end of the day? I mean, it's not like they're letting them fail and letting them go. I mean, that's not going to happen. They're not. The government's not going to allow General Motors to file Chapter 7 liquidation. So they could. It's not like they can come out and say, "Oh, we didn't." They still come and say, "We did the best we could. We gave them the 40 or 50 billion or whatever it was to restructure," and everybody comes out looking better than they went in going in, right?
Absolutely.
Yeah, so that's how you see it ending.
Well, so VSL was weighing in. Mike G. from D.C. is agreeing with him. He says, what do you mean if the government steps in? They're already in up to their knees. Meaning when we're talking about this public kind of private interaction, Peter, does the government still have the strength that it had a couple months ago? The validity, the legitimacy to actually provide that backing. Is it still as strong as it was 6 months ago?
You know, now we're starting to talk about economics and stimulus and printing money. You know, I guess if the government's going to print money and spend trillions on stimulus, I guess there's a lot of money left to go.
But is it still as good of a partner? Like, for example, if you were saying let's develop this type of backing from the public sphere, is it still as strong as it once was? Does it still have the same influence, the same gravitas?
I think it could if the government stepped up and said, we're not just giving you money. We want, what works best in these situations is public policy cloud, governmental cloud, and private sector solutions. For example, the TALF program.
Right.
I love the TALF program because the government isn't setting a price, the government's not buying assets, the government's loaning money to private investors who have to put down, a modest down payment, but a down payment nonetheless. They get a low-interest loan from the government to go in and buy toxic assets, and it's the investors and the sellers of the assets that set the price, and the investors have some skin in the game, and the government is loaning the money. I like that much better than the government buying it. When the government buys assets, the taxpayers will lose.
So you want the government to, and this is what they want to do, by the way, with the banks now. Tim Geithner talked about this, the Secretary of Treasury, last night on the Charlie Rose interview that he did. They want to do this public-private type partnership with the banks. It's essentially incentivizing as opposed to handing out, right? So, I mean, will that work with the banks? Will the public incentives that they're providing be able to bring the private money in? What's your incentive as a private investor to get involved, and is there enough? One of
the key problems with the banks, and the problem I've had from the beginning with us just spewing billions into the banks, the government has no idea what the value of the assets are in the banks. They have no idea really what's behind the curtain at AIG. There's a lot of scary talk.
Right.
Wow, if we don't put in up to $250 billion with AIG, the world's going to fall apart. Well, maybe it does, maybe it doesn't.
How do we find out the value of those assets?
But the government has not necessarily been giving us the straight line. Going back to last fall when they said, remember when 85 billion was a big number?
Sure.
That was
right? Gigantic.
And what did the Treasury Department tell us back then? Wink, wink. This is going to be a great investment for the American tax.
Do you remember that?
Yeah, sure. Are you kidding? We reported it. I mean, that was one of the points that we would use, right?
And back then I said, and I'm still saying, they will be back. All of these institutions will be back like Oliver Twist, saying, "Please, Uncle Sam, may I have more?" Unless the problems are being solved together with putting the money in.
Right. But so this bad bank idea, I mean, just to get back to this idea, this could work, right? I mean, creating the public incentive, or the public providing the incentive for private investors to come in. Will they be able to do that? That's the basic
I don't
question.
know if they're going to be able to do it, but I like that idea a whole lot more.
You'd rather try that?
Absolutely.
It'll be interesting to see because, I mean, some people have said, all right, I don't have any incentive to buy these at whatever the fire sale price is. They could go down more, and why am I going to pay 50 or 60 cents on the dollar when it might be worth 20?
And part of that, the problem with that, and the reason for that, rather, is because there's very little transparency, even yet, with what's behind the curtain at a Citigroup, for example.
How do we get it? How do we get the transparency? Just stick it out there in the market and let the market set the price?
That's one way to do it. I mean, they don't want to sell at low prices, and we, as a government, we don't want to buy them at high prices because the taxpayer is going to lose.
Well, that's the problem with the government. They're going to say, the banks could say, "Oh, we don't want to sell this stuff." I mean, Geithner talked about that last night, and all he said was like, "Oh, we're going to give them the incentive." But what's the incentive if they say we want to hang on to it?
If you don't get past the too big to fail because the boogeyman's coming, you're going to have a very difficult time getting the private sector moving where it needs to go.
Yeah.
Okay, so if you had a chance to sit down with Timothy Geithner and President Obama, what would be your plan of attack?
In the real world, the world that I live in workouts and restructurings, at Gordian Group, no new money goes in unless the problems are all being solved. And that's not a principle that the government has followed yet. Look, these folks have very difficult challenges, and I don't mean to be unconstructive about how difficult it is, but there's some core principles: transparency, accountability, no new money in unless all the problems are being solved, and that's not what's happening.
On that basis and the vaguity that we've gotten from the Treasury Secretary, would you advise President Obama to replace Tim Geithner?
I have absolutely no view on. I wouldn't think of second-guessing the president's judgment about the team he has around him.
So you have confidence in that?
I wouldn't think of second-guessing the president's
You sound like a politician now.
Yeah, that's it.
No, but they're going in the right direction. The point is, on the larger issues, you think they're going in the right direction, it sounds like, now that they're going in this more incentivized direction as opposed to just throwing money, good money after bad.
The more we get to utilizing and incenting the private sector to solve the problems backed by government clout, direction, and that sort of thing, the better off we are.
Yeah.
These are very smart people facing extraordinarily difficult situation, but there's some. But I think one of the issues is that they're viewing this as an economic problem that is solved by throwing money around, as opposed to recognizing, at least my own belief, which is America is in a workout, a huge workout, and different principles apply in a workout situation if you want to be successful in solving them.
The principles of bankruptcy and the principles of restructuring that you talked about in the business that you're in. So
correct.
Make sure these things are in place before you do them is the thing. That's what's been missing. Is
absolutely
the point.
Right.
And so should they, for example, have required the banks to say, we're going to, some people said this, we're going to lend this money. Those types of requirements, essentially telling banks how to do their business. And they didn't do that.
But that's a terrible. The government, anytime the government sticks its foot in the private sector, other than as a regulator, bad things happen. You can't give money to an institution like Citigroup, just to pick on them for a minute,
right,
and say, we don't like you taking junkets. Well, maybe as a shareholder, that's exactly what they should be doing with their key people, but it's not. The government's role shouldn't be to do it, and yet we're now the shareholders, so are we looking at it from a public policy perspective or trying to improve Citigroup's performance and stock price?
Okay, so then give the best example of something that needs to be in place before you throw money at it that wasn't. That a requirement that should have been made of a certain entity that got a government quote-unquote bailout that wasn't made.
I believe in shooting straight rather than fast, and therefore the government should get its arms around what's behind the curtain before we just spew billions and trillions of dollars. And it's a very difficult task, but it hasn't been done.
What do you think is preventing that from being done?
Well, there's just a lack of transparency at these big financial institutions.
Yeah, but there's a government. I mean, if they're the ones that are going to provide the backing and the support for this kind of public-private partnership, if they're going to have the gravitas, then shouldn't they be the ones that can go into it and be the sheriff in town and say, here's the transparency, let's get it on the table right now? I mean, isn't that what we need? I
believe that. For example, we don't even know the names of the institutions that have received our money. Mm-hmm. What kind of transparency is that?
Yeah, well, we sued at Fox Business to get those names from the Treasury and the TARP, and we won at least the first part of that. But you believe there should be more transparency on those types of things. What about on AIG? Should we know the counterparties at AIG? Because everybody's, well, if we're going to know who's involved here, we should know who the counterparties are. And then others say, well, if you did, then there'd be a run on them. I think we essentially know who they are, by the way. They're the big names on Wall Street. Those are reported in the paper. But should we know all those things?
Well, I would like to. Yeah. Wouldn't you like to demystify what's going on, where the Wizard of Oz is behind the curtain, to know, is this really a good use of up to $250 billion? And
also to know that if somebody, whether it's Hank Paulson or anybody else, comes out and says on Monday we're going to have a meltdown, to know whether or not there's anything behind that.
Correct.
Right? I mean, because we never know what the worst case scenario is.
There's a lot of scare tactics going on, and I'm certainly not knowledgeable enough to know how true it is, but I do raise the question, how much is too much to spend when you don't really understand what the downside is.
Right. Now, our viewers don't want very much government involvement at all now, do they?
It doesn't seem like it. Bob at Fort Hood, Texas says it's amazing they can give my money to people and not name them. If you can't even do that with members of your own family.
Peter's point.
Causes a big problem. But Peter, I'm a little bit confused though about just your outlook. I mean, what is your outlook for 2009, for 2010? I mean, are you optimistic? You said you trust the guys that are around President Obama. I mean, what do you really think about what's going to happen here?
I said I'm not going to second-guess President Obama's judgment about who he puts in, and he has a lot of smart people with him. So that's what I want to say about who he's got. These are very difficult problems. The government cannot legislate prosperity. The government can't change a rule and all of a sudden everything's great and people feel like spending. There's
no magic bullet.
Yeah, but business is good for you right now, right? I mean, there's a lot of distressed funds out there, distressed people that need help. I mean, so business right now for you is good.
Business right now is brisk, and we're lucky to have that. But business has been good for us for 20 years. It's just we're a little busier now.
More people need
but back to the issues. The government is trying to tell people go out and spend at a time when I believe that individuals should be saying, I'm hoarding.
Yeah.
You've got these homeless tents around this country. This is not going to change quickly. And everyone's focused on the stock market, which goes up and down, and I think it's going to go trade within a band. And my own view is it's going to go a lot lower before it goes a lot higher.
How low?
But you can't legislate people changing their habits. You can't legislate confidence. You can't legislate jobs being created in the private sector, and those things are going to take a long time to change.
So what is the trading range, though? How low? Talk about that for a second.
I'm glad to, although I must say, as opposed to workouts and restructurings, where I do think I'm very qualified, I'm just somebody else watching the Dow.
Yeah, well, we all are at this point, right? It almost seems like that.
I think it trades between 6,500 and 7,500, maybe 8, and then I think it goes back down a lot farther. But I'd like to be pleasantly surprised.
There's this whole debate. We're going to let you go in a minute, Peter, and thanks for spending all the time with us. But there's this whole debate, that's also very interesting about how we approach this, right? If you listen to Geithner, and I assume Larry Summers would say the same thing because he kind of came up in the same time frame, is a little more experienced, but still in the time of the 90s when they dealt with mostly crises that were outside of this country. The Asian financial crisis, the best known of them, the long-term capital bailout and what have you. And Geithner has used that as an example, saying that government has to act quickly in these situations. The problems arise when government is not aggressive enough. Now, I don't know if you read it, but Stephen Roach from Morgan Stanley, who's based in Asia now, wrote a very, to me, an interesting piece. It was actually in yesterday's Financial Times, saying that the bailout of long-term capital essentially created more problems, because when you bail out somebody like long-term capital, the next time you have a crisis, it's going to be a worse one, i.e. the one that we're dealing with now, because you essentially prop up some of the excesses as opposed to fixing them. I mean, where do you stand on that kind of overall approach? Because that's really at the heart of it. I mean, if Geithner and these guys are wrong about that, we're really in trouble.
I used to work with Steve. He's a brilliant guy. I did not read the piece, but I take his point. This gets dangerously close to the moral hazard issue.
Right.
And people will say, oh, no time for moral hazard, no time for people's qualifications and background checks. We've got a problem now. We've got to move quickly, quickly, quickly. And the problem is nobody knows.
Yeah, because if they're wrong about that, and the next crisis 10 years down the line is worse than this one because we, essentially propped up failing institutions now and what have you, then that's real. That's real bad. Then that's depression. Forget about this debate over recession depression.
We are propping up failed businesses and, what's worse, failed business models. And I don't think that's the right thing to do. The RTC, in my view, had it right in the late 80s, early 90s. And we used to advise the Office of Thrift Supervision on some of this stuff. They went into these institutions, the financial institutions, and said, fix your capital issues in 30 to 60 days. If we like the plan, great. If we don't, we're going to take you over and liquidate, or we're going to put you in the hands of a more financially capable partner.
Yeah.
And I like that approach.
Well, you have a child. What kind of world is she going to inherit when she's entering the workforce? I mean, how do you think this sets someone younger, the younger generation up?
I have two, and it's going to be a challenging time. And the kids have to be prepared for that. And I think we all have to be prepared for these challenges, because I don't think they're going away. I don't think they're going away anytime soon. They can't.
Well, she could go into business with you. Kind of like that.
I would love that.
Wouldn't that be great? That would be really cool.
And read your book, right? Distressed Investment Banking? Give you a little plug there. Thanks, Peter. That was a lot of time that you spent with us, so we appreciate it.
Great
Peter
to be
Kaufman
here.
Thanks,
at
Peter.
Gordian. Thanks very much again.